If you've been watching my videos for a while, it's no secret that I've set up a US company in order to manage my international e-commerce operations. Now, I run multiple e-commerce stores in the US primarily and now starting in the UK too. And the way I've set up my operations is that I have an Indian company and I also have a US company. Now, that US company is a independent entity. I am the sole director of the company and I own 100% shares of that company. And under that company, I run my e-commerce ventures. And because I have a US company, I'm able to get Shopify Payments on my e-commerce store, which what it does is that it reduces the 1% or 2% charge that Shopify takes per transaction to zero. Plus, I also get the great low transaction rate of 2.6% plus 30 cents on Shopify Payments. I also have a US PayPal account, which saves me a ton of money had I been using an Indian PayPal account, because I used to use an Indian PayPal account for my international transactions. I used to, pay a lot in currency conversion fees and a lot in transaction charges. Now, all of that is completely gone because I run a US PayPal account, a US bank account, a US company, a US Shopify Payments account, and a US Stripe account. Now, all of this combined creates an awesome business that lets you juice out the max that you can from your e-commerce business. Now, when you're running an e-commerce business, the margins are as it is quite thin because you have say 10%, 15%, 20%. If you are running an absolutely insane level of marketing at scale, you can do maybe 25% of profit margin. But when you include all of the fees such as currency conversion fees, when you include GST, when you include the high level of like transaction charges for international transactions, if you were running our entire operations from your Indian company, which I used to do in the past, well, you end up giving about 10 to 15% of your revenue, of your entire revenue, to banks, to the government, to PayPal, to a lot of these different entities. And in order to save all of that, I started my US company several years ago. I started my US PayPal account a couple of years ago. And now all of the operations are being done from the US. And the profit, the net profit that is generated, a large chunk of the net profit goes into my Indian company account, which I can use for my Indian expenses and all of the salaries, and of course, make out a net profit at the end of the month on my Indian company too. Now, of course, if you're running a business that is, $1 million, $2 million, $3 million in turnover, a net savings of 10 to 15% could mean an additional $100,000, $200,000, $300,000 in your pocket. That would be like money that you earn in your pocket as net profit rather than giving to all the different entities. Now, one big question that people have in relation to this entire operation is, what about taxation? What about taxes? How do you handle your taxes? So inside this video, I'm going to tell you guys all about taxes, how I handle my US company taxes, because I've been filing my US company taxes for about, I believe this is the third year now. So I have a fair chunk of idea, and believe me, it is so simple. Now, all you need to do is prepare a sheet which has all your earnings and your expenditures, and you need to prepare all the backend documents, like you take out exports from your Shopify Payments account, you take out exports from your PayPal account, like all the transaction history, transaction summaries, all the fees that were charged. So you take out all of those exports from these different entities and you combine all of this, send it over to a CPA in the US, and you can hire a CPA using a platform like Upwork. Just do a job post like, I'm looking for a CPA to do my annual income taxes for my company, and you can interview a few candidates. You can find your perfect candidate and that you want to work with. They need to be a registered CPA, chartered accountant, and then you get in touch with them. You give them all of these documents, and they can actually file it's called Form 1120. They file the Form 1120. They give it to you for signature. That includes the net like income tax that you have to pay to the US government. You register for an EFTPS account, which is a government website. They give you a PIN on your physical mail. You need to enter the PIN, you need to enter a password, you need to select Form 1120 while scheduling a payment, and then you pay your income tax. Now, this is the entire like large chunk of things, how this works out. So let me first show you the sheet. So this is the sheet. This is your company income statement for whatever year you want to put it. In order to use this Google Sheet, what I would recommend is, I'll give a link in the description below. Just click on File, click on Make a Copy, and then once you've made a copy, then you'll be able to edit the sheet. Now, this is going to have your primary bank account, and then you're going to mention the sales that you have done and the expenses you have done, which calculates sales minus expenses is net profit. So you have your e-commerce, the revenue that you've done on e-commerce, the revenue based on Shopify Payments, the revenue that you've done via PayPal on your e-commerce store, the revenue if you're using Amazon, Walmart, eBay, all of the other platforms, the revenue that you've done there. If you're selling, say, digital products, or if you're selling consulting, or if you're selling anything else on your Stripe account in the US, all of that revenue comes here, and you add all of this up. This comes out to say $230. This is the entire revenue that you did in the year of, say, 2020 that we're doing right now. And then here are all the expenses that you incur in order to run the business. Now, these are going to be all of the Shopify related fees, transaction charges, Shopify Payments, of course. These are your PayPal transaction charges, refunds, disputes, Facebook ad account, Facebook ads that you've paid via PayPal, Amazon selling fees, Amazon service fees, refunds, advertising, etc. The transaction charges on Stripe, the bank fees that the bank charges you, your chartered accountant fees. If you're registered for sales tax, now because I do substantial volume in several states of the US, I have hit economic nexus in certain states. So I'm registered for sales tax in those certain states. I believe it's about 10 to 12 states now. I have to file, sometimes it's monthly, sometimes it's quarterly state taxes. Now, a large chunk of this, like calculations and charging of tax to customers, is automated by Shopify. Calculations is automated by an app that I use called TaxJar, which you can easily connect with the Shopify store to make it all semi-automated. I just have to file the taxes, sometimes on a monthly basis, sometimes on a quarterly basis. Now, I had to hire a consultant in order to register for state taxes. You could, of course, Google search like consultant to register for state taxes. You're going to find several. Just hire somebody who's going to help you, your company, your US company, register for state taxes. So the payouts that have been done for the state sales taxes. Then you have your phone and PO box, your marketing cost, your 3PL cost, if you have running multiple stores, then your Chinese supplier cost, and then of course, the rest of this is the money that you give to your Indian company. Now, this is your real profit that you generate inside your Indian company. Now, this is where the double taxation part comes into play. Like, a lot of people question, like, if you're making all of the revenue in the US, then you have to pay tax in the US and then you have to pay tax in India also. That is not true. What you have to do is something like this, right? So the Indian company is paying for a lot of expenses for the US operations as well. Like, sometimes a little bit of charges for Facebook ads, a little bit of charge for Google ads, not much, but a little bit. And then you also have like items that you purchase from, say, AliExpress or from, say, eBay that you want to pay using your Indian card. So all of those expenses. And then the large chunk of this is business consultation. All right. And the business consultation part is basically what you're charging the US company in order to facilitate the entire business that the US company is running. Because see, as it is, there are no people inside the US company because there's nobody located in the US, right? So the Indian company is largely handling all of the operations. Say you have staff here, say you've hired people for customer support, for doing several operations of the e-commerce store. So all of those expenses are being borne by the Indian company, right? So the Indian company charges the US company a business consultation fee. Apart from that, they also charge like support and service staff salaries and some management fees. So all of this combined is the net revenue that your Indian company gets from the US company, which comes out to a large chunk of the profit. So about, I would say, whatever net profit that you generate on your e-commerce stores, about 90 to 95% of the net profit is going to come back to the Indian company, right? So whatever 5 to 10% of the net profit you're left with, that is going to be the total profit or loss that you made at the end of the year. And that on that amount, you have to pay your US income tax, right? So I'm going to pay US income tax on just the $4. I believe the current rate is about, I think 21%, 25%. I'm not really exactly sure what the current rate is, the federal income tax, but I believe it's somewhat in that range. So maybe $1 in, income tax that I have to pay to the US government. But the profit that I generate, all of this profit, the money that goes to the Indian company via wire transfers from the US company all throughout the year, that is the net profit that is being generated by the US company that is being transferred to the Indian company. And then, of course, when it comes to India, I have to pay taxes only on that amount that reaches the Indian company after taking out my expenses of the Indian company. So of course, I have to pay my salaries and all of these things from those earnings too. So after taking out all of those expenses, whatever net profit is generated in the Indian company, that is what I used to pay off my income tax with. So in summary, that is how the entire system plays out. So you're not actually paying double tax. You're only paying tax on the net profit after taking out the money to the Indian company inside the US company, and then of course the Indian company's expenses taken out, you're paying the Indian company taxes. So you're paying taxes in both the places. A large chunk of the taxes is going to be paid in India because a large chunk of the profit is being imported to India, but you're not paying double taxes. And that is how the entire system is structured around running both an Indian company as well as a US company and handling all of the e-commerce operations. Now, some of you might feel it's a bit complicated, or it's quite cumbersome to handle all of this. Honestly, the first year or the first time I heard about all of these things, and I had to manage all of these things, it was a bit complicated, but it only took like a few weeks of like research or a few weeks of effort into arranging the documentation. Like, for example, the sheet that I've prepared, I've actually mentioned inside the notes here, like where you can export, what document you need to export from which website. So say PayPal reports financial summary, that is going to have the sales amount that you've generated. So all of these figures, now it only takes me few hours to completely do my federal income taxes for the entire year. I hand over all of these documents to my CPA in the US. They charge, of course, a fee of their own. They file the taxes, and that's pretty much it. You just sign the Form 1120, you pay using EFTPS, and you're pretty much done for the entire year. I hope I was able to provide some clarity to you guys. It is most definitely 145% worth it, I can assure you, because if you're running a substantial business, of course, in the US, it does not make sense to give lakhs and lakhs of rupees, or hundreds of thousands or millions of rupees to different entities like banks, like PayPal, the government. Why do all of this when you can actually save up on a lot of this by running both an Indian company as well as a US company, a legitimate business being run in both the countries, and you're of course paying only taxes on which you have made a net profit on. So this is the entire story, guys. Make sure you hit the like button below. I hope you found value in this, and I hope this helps you manage your income taxes if you're running both an Indian company as well as a US company for a digital product, or your consultation, or your e-commerce, or whatever may it be. So I hope this was helpful for you. I'll see you in the next one. Until then, okay, tata. Bye-bye.